In this video, I'll do my absolute best not to claw my eyeballs out as I read a new research note from Morgan Stanley claiming that there is an oversupply of EVs globally right now. That's right, ladies and gentlemen. This isn't a disruptive technology. It isn't inevitable. We're not seeing exponential adoption. No. There are now questions. In fact, there's clear evidence that there's a slowdown in EV demand globally. I posted a very spicy video on Patreon today, a story from my sordid 20s back in the day when I was hanging out with some rather questionable people. This video contains a mix of debauchery, facts, and a tale of the biggest simp to ever simp. There's a valuable lesson about this level 99 nice guy. It involves a car accident, a stripper, and the most pathetic display of nice guy behavior I've ever witnessed in my entire life. Now, I've grown and evolved a lot as a person since my 20s. Still got a long way to go, but fair warning, this may raise a few eyebrows. If you think you can handle it, head over to Patreon with the card in the corner or the link in the pinned comment. And remember, nice guys really do finish last. Tesla's big price cuts accelerate EV deflation. What does the competition do? Spoiler alert, they keep doing what they were going to do, fail anyway. Price target $250 per share. Over the past 2 quarters, the EV industry has moved from acute undersupply to oversupply, driving a major reset in pricing. Now, I've got to take a moment here. This is false, like patently false. The reason for the recent pricing adjustments, we had an incentive coming in China, a new incentive in the US. Consumers aren't morons. They know, okay, hang on, I could wait a couple of months and I'll save $7,500. Okay, I'll wait. That's caused some pricing adjustments. The second thing is the corruption in the EV tax credit proposed in the US, meaning Tesla's Model Y, the most popular EV on Earth, the best EV on Earth, soon to be the best-selling vehicle on Earth by unit volume, then double the unit volume of the world's best-selling vehicle ever, then triple and then probably quadruple as well. Miraculously, Tesla's Model Y, an SUV, was not considered an SUV in the Inflation Induction Act. Therefore, at its prior pricing, it wasn't eligible for this tax credit. This is patently unfair, clearly corrupt, intentionally designed to fuck Tesla, and unacceptable. But instead of Tesla whining too much about it, they just said, okay, fuck it, we'll just cut our prices. And they did. This isn't an issue about demand. As I've said, if there were 20, 30, 40 million EVs being produced annually already, they'd sell all of them. This is not about an oversupply. It's about pricing, timing, and incentives. There's a lot of moving parts here. Consumers are not dumb. If they know a new huge incentive's available in a few months' time and they're planning on buying an electric vehicle, they're going to delay their order. They're not that fucking dumb. This doesn't mean that there's no demand. It means that people are delaying their orders and the same amount of demand still exists. It's just been pushed into the future. So rather than sitting on their hands for 3 months, an automotive manufacturer that can actually profitably produce EVs is going to reduce pricing to pull forward that demand to ensure that consumers, rather than waiting 3 months, buy their vehicles at slightly lower margins. This isn't about oversupply, it's about pricing. You'll know when it's an issue of oversupply, when there is insufficient demand for electric vehicles. When companies like Tesla start slowing down their expansion, going, you know what, we've decided we're only going to run Austin at 10% of its final capacity because there's no demand. You know what, fuck it. That factory we just announced, we're actually not going to build that because there's not enough demand. That's when you'll know there's an oversupply of electric vehicles. Pricing is a very, very poor indicator when there are incentives phasing in and out. To take this to the most extreme example, let's just imagine hypothetically that there's a new EV incentive coming into play in 6 months' time. And in 6 months, you'll be able to get a Tesla Model Y with $60,000 tax rebate. So it's basically free. If you're a consumer who was intending on purchasing or has already ordered a Tesla Model Y, and you hear in 6 months' time you get it for free or you can pay 60 grand today, what do you think you're going to do? You'll wait. That doesn't mean there is not sufficient demand. It means that a consumer has a brain and goes, oh, would I like a free Tesla or pay 60 grand? Not a hard one to figure out, is it? I don't want to labor the point, but I really want to make sure people get this, because this is a narrative that just does not match reality. There isn't an oversupply of electric vehicles. There is an undersupply of compelling electric vehicles. Make no mistake about it. In the coming decades, more than 1 billion new electric vehicles will be sold. As global EV production scales up, particularly lithium-ion batteries, the overall costs come down. The whole industry benefits, some more than others. So again, you'll know there's an issue with oversupply when companies start slowing down their EV plans rather than continuously accelerating them. If you're looking to pricing adjustments as an indicator for demand, you're barking up the wrong fucking tree. Like I said, temporary incentives, phasing in and phasing out, will cause consumers to bring forward or push back purchases of vehicles. And companies will need to make short-term adjustments, not due to a lack of demand, but due to an abundance of consumers who have a brain that works, thinking, why would I buy it now when I can save thousands of dollars if I delay? Hopefully you guys get the point. Until you hear companies going, you know what, we've decided not to build this factory to make EVs after all. We're slowing down our plans, we're reducing our investment. We're not going to run this factory at full capacity after all. Until that happens, we don't need to be questioning EV demand. There's a lot of moving parts we have to consider here. Now don't get me wrong, heading into a recession, there's going to be less consumers looking at purchasing vehicles. I get that. I look forward to revisiting this video in 5, 6, 7 years' time, when approximately 80% of all new vehicles sold on Earth are electric. And nobody watching today would believe that, but it will happen. Alright, rant over. As Tesla pricing falls, where does this leave Tesla margins? Spoiler alert, a little bit lower than they currently are, but not as much as you might think. No, really. best guess, gross auto margins, probably around 25% this quarter. Don't know for sure, kind of throwing darts here, but I think margins are going to be a lot higher than most people are expecting despite the price cuts because Tesla costs are coming down. Again, they're benefiting from economies of scale. They continue to innovate in terms of manufacturing. The newly ramped factories will be far more efficient than Fremont in particular, much more profitable. Material costs are coming down. They got a lot of tailwinds. Never mind the software component. And can competitors keep up in this EV race to the bottom? No, they can't. They're fucked. Unequivocally fucked. Remember earlier in 2022 when there was a 9-month wait for a Tesla? Those days are long gone. Thank fuck. Not just a China phenomenon. What started out as a pricing reset in China that began in October and accelerated into the new year has quickly spread to Europe and the US market. According to the company's website, Tesla's cut its US prices by 6% for a base Model 3 and 20% for the Model Y, aligning the cheapest version of the Model Y to be eligible for the IRA passenger car tax incentives with a $55,000 pricing threshold. A similar magnitude of price cuts were also introduced across European markets and basically everywhere actually, including Australia, which again, Tesla's master plan, kind of in there, drive prices down, more people can afford them. This is going to keep happening, guys. There's going to be continual price cuts. Occasionally they go up, but most of the time the trend will be down. And again, if the price of EVs is coming down, it doesn't mean there's a lack of demand or an oversupply. It means the cost to produce them is coming down and adjustments are being made accordingly. I'm going to be having this conversation many times in the coming years before people finally get it. Why are EV prices falling so much? A combination of factors including A, slowing demand, wrong, accelerating demand. This will not age well. Check back at the end of next year. Look at the year-over-year increase in EV sales in China, in Europe, in the US, and globally. Demand is accelerating right now. Demand for ICE vehicles is slowing, in fact collapsing. Sharply recovering supply. Easing input prices. This is a big one. Cost and scaling improvements. Another big one. And competition. Furthermore, regulatory incentives with maximum price thresholds for IRA eligibility have provided additional encouragement. Now, this is a big point. A major point. And if you haven't noticed, the reason for Tesla's massive price cuts in the US, to get around these corrupt incentives, they're going for the fucking jugular here. Just imagine being a company trying to compete with Tesla and they have so much pricing power that they can slash the prices of their vehicles by thousands of dollars each and still be making more profit than the industry average in the automotive industry, leading into a recession, a race to the bottom. In a normal state, EV prices should be highly deflationary over time, given significant reduction of design complexity and high volume bingo! They get it. Exactly. EV prices will precipitously decline over time. This is not only necessary to make EVs affordable for all consumers on Earth, but it's also going to be a side effect of just simply scaling up production and improving the technology. This pattern of deflation was significantly interrupted by supply chain shortages and input cost inflation. Bingo. And also a severe lack of supply. It was absurd that Tesla had 9+ month wait times on their vehicles a year ago. Absurd. We had a confluence of factors forcing prices up to literally embarrassing levels. As we pass through this time and EVs resume a deflationary path, investors should expect the industry's price leader, Tesla, to continue to offer a better product at a lower price. Exactly. Tesla is in a position to drive industry prices significantly lower. Again, this is absolutely true. And again, if you're the competition, rest in fucking peace. No one else is making any money on EVs. A prerequisite to achieve higher EV penetration through 2030 and beyond. We have long seen a path to a $15,000 EV that could transform an emerging market like India. Now, this is A, true, and B, going to happen, and C, kind of impressed that Morgan Stanley are actually thinking about this. By the end of this decade, a very compelling $15,000 EV will be absolutely possible. We still believe this Casio G-Shock moment for EVs, with smaller, different batteries, different manufacturing processes, and a radically re-architected supply chain will happen over time, and completely agree on this point. Can the flipping of the sign in EV prices be an indicator for the rest of the auto industry, internal combustion vehicle prices, or for the broader economy? We remind investors that the closest consumer substitute to buying an EV is an internal combustion engine car. Keep that in mind as days supply of inventory continues to recover from historical lows and as used vehicle prices keep coming off historical highs. The two big questions from investors this morning. What's the impact of Tesla's price cuts on gross margins? In this tape, everybody's Tesla model is under continuous review. Given model mix, options, foreign exchange, and other factors, deferred revenue, recurring revenue, aftermarket, etc., it's difficult to translate an announced price cut directly into Tesla average selling prices. But as a starting point, we'd look to have all of 2022's price increases reversed. This headwind can be offset of bills of material cost improvement, design and input prices, fixed cost absorption, and other factors. But without the introduction of all new products, Cybertruck not enough? Tesla will be limited in finding offsets to the lower price mix. Taken together, we would be prepared for up to 500 basis points of headwind or more at the auto gross margin level, excluding tax credits, through the course of 2023. Some investors we have spoken to are running scenarios of closer to a 1,000 basis point gross margin decline. FYI, my Tesla bear case 2023 down about 1,000 basis points from recent margins. And I don't expect this likely, but I do think the worst case, it's possible. Given OPEX leverage, we believe operating margins could contract by approximately 200 basis points or more. Stepping back, we expect consensus forecasts to fall materially, but for Tesla to remain cash flow positive. We do note that some investors are beginning to ask us to think about scenarios of cash burn at Tesla and digging into the company's liquidity pile. How much of Tesla's cash is in China, and is this accessible liquidity? How times have changed. What does the rest of the EV competition, Lucid, Rivian, Fisker, legacy OEMs do here? Throughout 2021 and much of 2022, EV competition had the luxury of comparing their valuation to Tesla's valuation and having helped set higher and higher prices across their model range. And whether they knew it or not, the EV competition had effectively outsourced their pricing strategy to Tesla. That may end up being a headache today, indeed. As Tesla takes an increasingly aggressive lead on price reduction, the competition must now also cut prices or they're fucked. Or face a significant reduction in market share, if not an outright decline in absolute volume. None of the non-Tesla EV names under our coverage have proven to make a profit on their EVs. Exactly. And some, Rivian and Lucid, have a bills of material cost still well in excess of their average selling prices. In other words, not only are they making no money, they're actually losing money on every EV sold. For independent startups, the knock-on of Tesla price cuts raises important questions of burn rate versus capital sources and long-term business model viability. I think they're hinting that most of these companies are going to go bankrupt. At the same time, for the legacy auto companies, their management teams, mostly incompetent, and board of directors, likewise, must recalculate the payback periods and risk-return profile of their entire EV strategies, which were already a net consumer of cash even during the peak EV pricing era, and if they are willing and able to keep funding them. Everybody will need to cut price, but we don't think everybody will be able to cut costs and fund the business. Exactly, read between the lines, some of them are fucked, they're going bankrupt. Bottom line, Tesla's price cuts are, all else equal, an adverse fundamental development versus market expectations, but we believe potentially far worse for their EV competitors. Correct. Could Tesla's lower prices stimulate higher demand? Sure. Can aggressive pricing discourage or drive out competition? Probably. But at a time of slowing economic growth and rising rates, we don't think investors will give Tesla credit for these offsets at this time. We would encourage a conservative approach in factoring in the price cuts required to achieve the volume forecast and discourage adding additional volume to Tesla at this time. Oh God. In an environment of EV deflation, we believe Tesla's strong balance sheet, cost, technology leadership, and scale will be critical to solidifying their competitive advantage. With the painful reset of EV expectations globally, fucking idiots. That's right. You heard it here first, ladies and gentlemen. Morgan Stanley think that the expectations for EV adoption, the absurdly low expectations for EV adoption from the so-called experts are actually too high and need to come down. Pretty sure last time I heard these dipshits think that about 50% of all new vehicles sold in 2030 will still be internal combustion engine though, so what can I say? Within a painful reset of EV expectations globally, we see Tesla as a winner and reiterate our overweight rating, and this is a fair point. So just in case you missed yesterday's video, Tesla US prices from the beginning of 2021 up to the present moment after the new round of price cuts. Notice something, the price for most Tesla vehicles today are approximately the same price they were at the beginning of 2021, before Tesla was forced to massively and temporarily increase their prices. Now I do understand that thinking hurts, but it's very important in this case that we actually do use our brains. If Tesla has increased their production in the United States on every model available, spoiler alert they have, the X including the Plaid, the S including the Plaid, the Y and the 3, all variants, which they have. They've produced more of these in the US in 2022, and they're producing even more today than they were at the beginning of 2021. Yet the prices are about the same as they were, in fact in some cases still higher. Notice the difference here in green. Green is still higher than it was at the beginning of 2021. Exactly how can one deduce that there's an issue where there's too much supply and not enough demand for electric vehicles? What we're seeing here is Tesla pricing getting back to reality. Now obviously, lower prices means lower profit margins if nothing else changes. But this conversation isn't about whether the margins are 30%, 25%, 12%. Put that to the side. The question is about demand. I'm seeing this narrative from Morgan Stanley and many others now. EV demand is slowing down. There's insufficient demand. There's an oversupply. This is a load of horse shit. There is a severe lack of supply of compelling electric vehicles available today. And yes, over time, prices will continue to come down. You know, the next phase of Tesla, after prices continue to go down and down and down overall on all their vehicles across the board, Model 3, Model Y, Model S, Model X, you know what happens after those prices continue to fall? Predominantly due to Tesla's cost to produce them falling. The next step will be Tesla introducing their next generation vehicle, give or take maybe $25,000, $30,000 starting price. And when this happens, you're going to see the same round of brain damage out there. Oop, see, proof. There's an oversupply. The only reason they're introducing this new vehicle is because there's an oversupply of existing products. They need to have a cheaper vehicle. They're going bankrupt. It's over. EV demand is slowing down. And then later this decade, when they announce the subsequent next generation vehicle, I don't know, starting price of less than $20,000, maybe $15,000. we're going to hear the same tale. And at that point, when Tesla's producing and selling about 20 million vehicles per year, hopefully, finally, the narrative may finally flip from, oh, there's an oversupply of EVs, that's why prices keep coming down and new lower cost models keep being introduced, to, oh, geez, that EV transition happened faster than we expected, didn't it? I couldn't believe that all those legacy automotive companies and EV startups were bankrupt the whole time and Tesla just kept ramping up their production and eating everyone's lunch. Who could have seen that coming? Definitely not us. And the final thing to understand, ladies and gentlemen, is the software component, future autonomy. As I said in yesterday's video, it is in Tesla's best interest to sell every vehicle they make, which they will, irrespective of how much of a profit margin they're making on the hardware. In my opinion, Tesla doesn't give a fuck about the hardware margins, period. I mean, the more the better, but their goal isn't to make an enormous amount of money on hardware. It's to make money on software, autonomy, energy software, these kind of things, plus robotaxi fares. Tesla vehicles are Trojan horses. The more they have on roads, the more data they can collect. The more people hear about a Tesla their friend or neighbor just bought, the more Teslas Tesla sells, the more Teslas Tesla sells. They're so compelling that everyone rants and raves. We know this. So the more vehicles they sell, the more advocates, the more salespeople, unpaid salespeople, fanboys and fangirls they have out there, telling their neighbors and friends, hey, check this out, come for a test ride, it's so safe, check it out, the software cool, flight mode, yeah. In addition to creating an army of salespeople for free, they collect data, accelerate the progress of their autonomous software, accelerate their data lead, their already unassailable data lead, and then when the fleet awakens, when autonomy is solved, a ton of consumers, almost overnight, drop $15,000 pure profit, or they subscribe to FSD monthly, pay a couple $100 per month, pure profit for the rest of the lifetime ownership of that vehicle. And then there's their cut of robotaxi fares. Other automotive manufacturers do not have this same advantage. That's the end goal. Eyes on the prize. The goal for Tesla is to massively expand their fleet of vehicles, solve autonomy, turn on autonomy, and change the fucking world. The final takeaway from this video, until you hear companies slowing down their EV plans, intentionally deciding they're going to run their factories below full capacity, until you see that happening, you don't need to be questioning EV demand. Beside Tesla, outside of China, there's nobody making money on EVs today. And as Morgan Stanley points out, Tesla's basically dictating their pricing strategy. These companies need to be cost competitive with Tesla vehicles to just stay in the game. But to do that, they're going to be needing to lose $10,000+ on every vehicle sold. Doesn't end well for these companies. Now, I'm sure most people watching own at least one video game console. Did you know that the companies that make these consoles lose money producing the hardware? Did you know that? Because it's true, they do. They lose money selling you an Xbox or a PlayStation. They lose money. You know how they make the money? Software, after the fact. Now, if Nintendo is selling their Switch, or the Xbox is selling, and it's being sold for a loss, does this show that there's insufficient demand? There's an oversupply of Nintendos and Xboxes and PlayStations globally? That is worth considering. So here's my bet. Here's how I can demonstrate there is not currently an oversupply of electric vehicles. By the end of this decade, Tesla will still be building as many electric vehicles as they possibly can, not constrained by demand, but supply. They will not slow down their plans for expansion, the construction of new factories. They will still be building factories as fast as they can, ramping production as fast as they can, and making as many electric vehicles as they possibly can. Between now and then, Tesla is not going to slow down their plans. They're still going to be desperately trying to figure out ways to accelerate them and build more factories, more batteries, and more vehicles faster. That is my bet, and we'll know at the end of this decade whether or not I was right. I'm quietly, in fact, loudly confident. I'm sure you guys have heard of the term contact high. When you're around somebody that's like vaping up, you might get a little bit high as a result. I get contact embarrassment when I read these research notes. It is unfathomable that a mob like Morgan Stanley now is suggesting that there is an oversupply of EVs globally today. In early 2023, there's an oversupply of ICE vehicles. I'm telling you that now. Despite the supply chain challenges and massive reductions in overall ICE vehicle production in the last year or so, too many are being built. There's too much capacity for ICE vehicles. This is the story. Just about every EV any company makes over the next decade will sell. There's going to be a consumer out there. This is not true for ICE vehicles. And no one's talking about this. I'm sure eventually they will be, once the bankruptcies start rolling in. And don't forget, head over to Patreon, check out my video, a story from my very sordid 20s, the car accident, the stripper, and the nice guy of all nice guys. The biggest simp I've ever known. It's a very valuable lesson here, guys. And I do mean guys. Women, you're welcome to tune in just for the laughs. This video is especially for the men in the room. If you're not already a member on Patreon, you can join with the card in the corner or the link in the pinned comment, and I'll see you over there. Love ya.